Hey guys, welcome back to Wealth Creation Ideas. This is Mo, and today we're going to talk about Upstart Holding Inc. The company came out with their financial results today, and stock has been reacting very positively, up around 17.5% after the earnings were released. And today in this video, we're going to quickly go over how the financial results are lined up as compared to the company's guidance, how the company's guidance is for the coming quarter and for rest of the year. And then we're going to talk about, based on my valuation, do I recommend a buy, sell, or hold on this stock? So let's get right into it. Going over the financial results, if you look at the Q1 guidance, the company was expecting to have a revenue of 125 million. Actual came in at 127.6, which is a very positive surprise given that last couple of quarters company has not been meeting up to their guidance number. So this is really positive for the company. I was a little disappointed with the fee revenue, which came in at 230.5 million, whereas the company was expecting this number to be around 135 million. That got a little bit offset by better net income loss revenue number, which is positive. uh, Contributed margin came in at 58%. The company was expecting around 56%. So that is again a positive. Company has been doing quite a bit of work in terms of improving the contribution margin number. The number that really surprised me in a positive way was the total operating expenses. The company came in at 183.1 million as compared to 169.1, and last quarter, the company did provide some guidance that they have been trying hard to cut the cost, and seems like that part is working. And the cost only increased by 14 odd million year over year, and most part of that increase is driven by the volume related cost. So and year over year, the fixed cost, they were able to cut quite a few departments and focus their energy and expenses on the growth part of the business. So that is really positive. The other the another positive surprise was their total loans on the balance sheet. Again, I talked about this in my previous video, link of which I will add into the comment section of this video. So if you see that, they have been last couple of quarters, they have been holding their loans on the balance sheet close to $1 billion, including the loans that they have securitized. This number came down to 821 million this quarter, and this is a positive surprise. In other words, that they don't have to put their capital in terms of holding these loans on the book, rather than they can. With that, the big question becomes, what do we do with the stock? Is it a buy, sell, or a hold? And my view on this thing is that, if you look at the guidance for the company in last year for the second half of the year was around 300 million in fee revenue. This quarter, they increased that to 320 million in fee revenue in the second half of 2024. That tells me is that one, company is positive in terms of growth coming back to the company. The CEO on the earnings call was very vocal about banks and credit unions coming back into the credit markets. And if you look at the macroeconomic environment for the company in the next 6 months, interest rates hopefully are going to come down. Even the credit defaults, based on companies' assessment, have flattened out, and the adoption of companies' technology is increasing. There are more and more customers. Even the product offering, they recently got into small dollars, auto loans, HELOCs, right? All of this, which they have been working on for a while, is going to start producing some results. And remember that there is a lot of artificial intelligence models out there, but when it comes to an artificial intelligence model for lending, this company is in the forefront. So obviously they have, an advantage in this space. Now that being said, if from a valuation standpoint, if I just take a very conservative number of a $600 million of fee revenue or net or total revenue for the company, and apply a multiple of 5 times, that gives me a valuation of about $3 billion, which, based on the way companies' results came out today and their forward-looking guidance, seems to be a very reasonable number. And at $3 billion of valuation with about 89 million outstanding fully diluted shares, the stock price comes to around 33, 34. So that would mean that, even after tomorrow's uptake, and I'm hoping that this uptake after the earnings release holds tomorrow, there's still another 15 to 20% of upside on this company, right? So I will definitely be buying some shares of this company tomorrow, and and hoping to get some of that upside cashed in. So again, it's going to be interesting to see how the stock performs based on the new guidance from the company as well as positive results today. And we'll keep tracking, and we'll upload some more videos in the coming months to keep track of this stock and about few other ticker symbols. So let me know your thoughts on the comments, if there is anything else or any other ticker you want me to cover. Otherwise, look forward till to seeing you guys again till our next video. Thanks.